Okay, students, we had discussed the income method used to measure the national income, compensation of employees, operating surplus, and mixed income of self-employed. These are the three components used to measure the national income by income method. Besides this, we have to concentrate some precautions while using this method. The first precautions used to measure the income method while calculating national income. First, value of second hand goods should not be included, because the value of such goods are already included at the time when they were produced. So if we take the value of such goods again, then it creates a situation of double counting. Second, income from sale of shares are not included in national income, because these are the financial transactions and it does not produce any goods. So in that case, any income from the sale of share will not be included while calculating national income through income method. Third, transfer income like donation, subsidies are not included in national income, because these are not the factor income. These are the income received without rendering any production activity or production services. So this will not be included. Fourth, income from sale of second hand goods are not included, but any commission paid to broker will be included. So sale of income, any income received from the sale of second hand goods are not included. Okay, this point is already discussed, but any commission paid to the broker for the sale of such goods will be included, because broker is providing its factor services. So the any income received in the form of commission will be included for rendering productive services by the brokers. Imputed rent from owner's occupied house will be included in national income. Imputed rent means any rent which is estimated by the authority from that house in which owners are living. So these are the precautions which should be kept in mind. I am again repeating what precaution we should consider. Value of second hand goods should not be included, but any commission paid to the broker should be included, because broker is providing its factor services. Income from sale of share are not included, because these are the financial transactions and no production of goods are incurred. Transfer income like donation, subsidies are not included, because these are not the factor income. It is received without rendering any productive services. Next, imputed rent from the owner's occupied house will be included because the house is providing its services to its owner in the same manner as it provided services to the tenant. So these are the precautions which should be kept in mind while calculating national income through income method. Now, I hope the concept will be clear to you. What is income method? What is precautions? In income method, I am again explaining compensation of employees means the employees are getting salaries and the retirement benefits from the organization. Operating surplus, it is the income from property and entrepreneurship. Its subcomponents are rent, interest, royalty, and profit. Profit is also including dividend, corporation tax, and retained earning, and mixed income of self-employed. Now, we will discuss how we will attempt the numerical if the income method is used. Interest 100, values are given in crore rupees. Depreciation 80, compensation of employees that is 2000 crore rupees. Profit 100, mixed income 200, net factor income to abroad 100, corporation tax 70, indirect tax 100, subsidies 20, and we have to calculate gross national product at factor cost. Now, in this question, interest 100 crore rupees are given, depreciation 80 is given, compensation of employees 2000 crore rupees, profit 100, mixed income 200, net factor income to abroad. Well, net factor income from abroad is a difference between factor income from abroad and factor income to abroad. So it can be positive or negative. If factor income from abroad is greater than factor income paid to abroad, it will be positive. But if factor income from abroad is less than factor income to abroad, it will be negative, which will be shown by net factor income to abroad. Corporation tax 70, indirect tax 100, subsidies 20, and we have to calculate gross national product at factor cost. So, by seeing these items, we identified that these are the items related to income method. So first we will write NDP at FC, because we know that by using this method we calculate net domestic product at factor cost, or commonly known as domestic income. So the component of NDP is compensation of employees. First we will go the major component. If it is given in the question that we will not require to take the components. Compensation of employees, yes, it is given in question. We can use to write abbreviation COE, compensation of employees. Now we need not to take the subcomponent of COE. Now next is operating surplus, second component. Operating surplus is not given in the question, Then we will see the subcomponents of operating surplus. Rent, no, it is not given in the question. Interest, yes, it is given in the question, so we will write interest. Then royalty, no, it is not given. Profit, yes, it is given in the question. We see that besides profit, corporation tax is also given. Corporation tax is the part of profit, so we need not to take separately because these three items are the part of gross profit. So, and next is third component, mixed income of self-employed. Yes, mixed income is also given. Now, add the value of such item. Compensation of employees 2000, interest 100, profit 100, mixed income 200. So it will be 2400 crore rupees. Now what we have to calculate? We have to calculate gross national product at factor cost. GNP and FC. We have to calculate the item which we have to calculate. Keep it in your left side, and the value of item which is given to you or calculated, keep it on your right side. Now conversion. N it will be converted into G. Net investment will be converted into gross investment. So we have to add depreciation. Domestic will be converted into national. So we will add net factor income from abroad. P to P, no change. FC to FC, need not to change. So NDP at FC, the value of NDP at FC is 2400. Depreciation 80. Net factor income from abroad. See, here we have to get net factor income from abroad, but in this, the net factor income to abroad is given. It means factor income to abroad is greater than factor income from abroad. So we will subtract it, right? Minus 100. So we will get 2380 crore rupees as the final answer of calculating GNP at FC. I hope the concept is clear to you that how income method is calculated, the different items given in the question. Keep it in mind that while using this income method, we always calculate by using these components, domestic income or NDP at FC. The last and third method which is used to measure the national income is expenditure method. Expenditure method. It means the expenses incurred by the household, firms or the government to purchase the goods and services, to produce other goods or to meet their own requirement. So the component of expenditure method is first private final consumption expenditure. It means the expenses incurred by the firm to purchase the goods and services to meet the requirement. Second, government final consumption expenditure. It means the expenses incurred by the government to purchase goods and services for public welfare. Third component is net export. It is the difference between export and import. So in this case, you see net export. When value of import is minus from export, we get net export. Here it means that export is greater than import. It may be positive or negative. When export is less than import, it indicates net import. So the value will be negative. Next component, gross domestic capital formation. It means the expenses incurred by either by the government or by the household or by the private sector or the production sector on fixed assets. Gross domestic capital formation. Gross domestic capital formation has three major components. First, household, residential, fixed investment. Second, gross public investment. Third, gross business fixed investment. These are the three parts of gross domestic capital formation, and in these three items we add change in stock. And change in stock, again I am repeating, is the difference between closing stock minus opening stock. These three items are known as gross fixed capital formation. Now again we are going to discuss the different component under expenditure method. First is private final consumption expenditure. Private final consumption expenditure means the expenses incurred by household to purchase the goods and services to meet their requirements. Second is government final consumption expenditure. It means the expenses incurred by the government for the public welfare, like the expenses incurred by the government for providing defense services, for providing police services, and for example providing free electricity. These are the expenses incurred by the government but for public welfare. Third component, net export. It is the difference between export and import. It can be positive or negative. Fourth, gross domestic capital formation, which include gross fixed capital formation plus change in stock. Gross fixed capital formation include household residential fixed investment, means the expenses incurred by the household for the construction of new house, for the construction of or addition of the floor on their building. Gross public investment means the expenses incurred by the government on fixed assets like construction of dam, construction of building, construction of roads, etc. Gross business fixed investment means the expenses incurred by the business firms for setting up of their industries, establishment of new machines, In the business, these are the fixed investment. By adding these three items, we get gross fixed capital formation, and this we add change in stock. So this is part A and part B. So gross domestic capital formation is the sum total of A plus B. And by adding all these four components, we get GDP at MP. This is the expenditure method. Well, while using this method, we have to keep in mind certain precautions. What precaution we should use? Precautions. First, value or expenditure incurred on intermediate goods should not be included. As discussed earlier, because value of such goods are the part of final goods, and so any expenses incurred by the firm on purchase of raw material or input are not the part of national income. The value of such item will already be excluded. Expenditure on sale of second hand goods should not be included, because the value of such goods are not the part of current production. Suppose I purchase a second hand mobile phone, second hand car from my friend. In that case, it will not be included, because these are not the part of current production, or the value of such goods are already included at the time of their production. Third, expenditure on purchase of share, bonds are not included, because these are the financial transactions and do not take part in the production of goods. These are the part of only transfer of ownership from one person to another person. So these financial transactions are not included in expenditure method while calculating national income. Fourth, imputed value of owner's occupied house will be included, because the house is providing its services in the same manner as it provided services to the tenant. So these are the precautions we should be keep in mind while calculating or using expenditure method to calculate national income. I hope the concept is clear to you about the expenditure method. Now we will discuss about the numerical, how we have to attempt numerical by using this method. Suppose in the question, export values are given in crore rupees, export is given 100, private final consumption expenditure 700, import is given 300 crore rupees, gross fixed capital formation 200, government final consumption expenditure 1300 crore rupees, closing stock is 80, opening stock 100, depreciation is 300, net factor income from abroad minus 100, net indirect tax 200, and we have to calculate find net national product at factor cost. Now, I am repeating the question. The values are given in the question is export 100 crore rupees, private final consumption expenditure 700, import 300, gross fixed capital formation 200, government final consumption expenditure 1300, closing stock 80, opening stock 100, depreciation 300, NFIA minus 100, net indirect tax 200, and we have to calculate net national product at factor cost. So we have to find this. Now, as we see that in the given question, value of expenditure method are given. So by using this method, we first calculate gross domestic product at market price. So GDP at entry. The first component is private final consumption expenditure. See, in this question, private final consumption expenditure is given. So I will write private final consumption expenditure. Then we add government final consumption expenditure. See, in this question, government final consumption expenditure is given here. Government final consumption expenditure. Then net export. See, net export is not given in the question, but we can calculate it net export from subtracting the value of import from export. So in bracket we will write export minus import. Export minus import. Then plus gross domestic capital formation. Gross domestic capital formation is not given in the question, but gross fixed capital formation is given in the question. Gross fixed capital formation, and we have to add change in stock into it. A plus B will calculate gross domestic capital formation. So gross fixed capital formation plus change in stock. Well, in this question, see, change in stock is not given, so we can subtract the value of opening stock from closing stock. Write in bracket closing stock minus opening stock. Private final consumption expenditure 700, government final consumption expenditure 1300, value of export 100, value of import 300, gross fixed capital formation 200, and we have to add change in stock into it, plus closing stock 80, opening stock minus 100. So 700 plus 1300 minus 200 plus 200 minus 20. So 1980 crore rupees is the value of GDP at MP. This value is calculated by using expenditure method, and through expenditure method we get gross domestic product at market price. Now we have to calculate net national product at factor cost, and we had already calculated GDP at MP. Now do the conversion, gross into net minus depreciation, domestic into national plus net factor income from abroad, P to P, product to product, no change, and market price into factor cost minus net indirect tax. Value of GDP at MP is 1980, value of depreciation is 300, net factor income from abroad value is minus 100, and net indirect tax is 200. So $1380 crore rupees is the final answer for calculating national income or NNPFC by using expenditure method. I hope the concept is clear to you how we can calculate the different items by using expenditure method. Keep it in mind that while using these three methods we can calculate the three different values. Like if we use value added method, we calculate gross domestic product at market price or gross value added at market price. By using income method, we calculate net domestic product at factor cost or domestic income. By using expenditure method, we can calculate GDP at MP by using these four components. Okay. Well, when we use value added method, we have to also concentrate or we have to take care of double counting. Double counting. What is double counting? When the value of a good is taken more than once in calculating national income, is known as double counting. For example, if a farmer produce wheat and sell for 100 rupees to the mill owner produce wheat flour. From this wheat and sell it for 200 rupees to the baker. Now the baker produce bread from this wheat flour and sell it for rupees 300 to final consumer. Now in this case we see that the value of wheat is counting more than once. Farmer sold wheat for 100 rupees to the mill owner. So value of wheat is 100. Mill owner sold flour from wheat to baker for 200 rupees. Again baker produced bread from the wheat flour and sell it to the final consumer for 300 rupees. Now in this case value of wheat is 600. This is known as double counting. So what should be done to avoid double counting? Methods to avoid. First, final output method. In final output method, we will ignore the all kind of intermediary production and we will take the final value of goods that is paid by the final consumer. In this question, final consumer purchased the bread for 300 rupees. So we will take 300 rupees. So this include all the time the wheat and the value of flour into it. Second is value added method. In this method, again value of intermediate goods will be subtracted from value of output. At each stage. How? See, in this question, value of output, value of intermediate goods and value addition. See, farmer sold the wheat to mill owner for 100 rupees. It will be his value of output. Value of intermediate good is not here. So value addition is 100 rupees. Now mill owner sold flour to 200 rupees to the baker. So it means he has purchased the wheat for 100 rupees. Now subtracting the value of intermediate goods from the value of output, we will get 200 rupees. Sorry, 100 rupees. Next, the baker has produced the bread and sold it to the final consumer for 300 rupees and he has purchased the flour for 200 rupees. Subtracting the value from it, we will get 100. Now, taking the value of value addition, we will get 300 rupees. Total intermediate goods is 300 and total value of output is 600. If we subtract from at each stage the value of intermediate goods from the value of output, we will get value addition, that is 300 rupees, which is equivalent to the final output method. So this concept is clear to you very well. What is double counting and what method should be used to avoid double counting. Okay students, we had discussed the national income thoroughly, the theory concept as well as the numerical concept. We came to know what is national income, how it is different from domestic income and the different aspect relating to the national income. the different method used to measure the national income, and what precautions should be considered while measuring national income. Besides this, we had discussed the numericals given on the different type of methods. Now, after doing all such or discussing all such concepts, you have to do some homework in your homework notebook, which will help you to relate the concept regularly. Today, what we have discussed, you have to attempt all such theory or numerical question in your homework notebook and submit me on the day when you come to the school. Homework. First, what is double counting? How it can be avoided? Second question, write the precautions used to measure national income by income method. Third, write the components of expenditure method. Fourth, what is income method? Write the precautions used to measure national income by this method. Again, I am repeating the homework. What is double counting? How it can be avoided? Double counting, as you all know, when the value of commodity is included in the national income more than once, is double counting. It can be avoided by using two methods: final output method and value addition method. What precautions should be used while measuring national income by income method? See, there are certain kind of precautions, that income from sale of second hand goods should not be included, income from sale of share bonds should not be included, value of intermediate goods should not be included, and imputed rent of owner's occupied house should be included. Components of expenditure method, four major components: private final consumption expenditure, government final consumption expenditure, net export, and gross domestic capital formation. What is income method? Income method is the method used to measure the income from the different sources, which includes compensation of employees, operating surplus, and mixed income of self-employed. What are the precautions used to measure the national income? There are certain kind of precautions which are similar. You will find in value added method, or in expenditure method, or in income method. So you can write all. You have to attempt all these questions in your homework notebook. That's all for today. Okay, students. I hope the entire concept is clear to you. What is national income and its related aggregates. Good day for you.